What if you invested £1 a day for 50 years? £1 doesn't feel like much. It's loose change. A parking meter coin, something you barely notice leaving your account. But what happens if you invest £1 a day, every day, for 50 years? Let's break it down. £1 a day is about £365 a year. Over 50 years, that's £18,250 total out of pocket. That alone doesn't sound life-changing. But investing isn't about what you put in. It's about time. That £1 a day is invested in something that averages a 7% annual return, roughly in line with long-term stock. Market history, something interesting happens. Compound growth takes over. In the early years, growth feels slow. Painfully slow. Your balance barely moves. Most people quit here because it doesn't feel worth it. But around year 20, the curve starts to bend. By year 30, the growth becomes noticeable. By year 40, it feels unreal. And by year 50, that £18,250 turns into over £85,000. Not because you worked harder, not because you earned more, but because you gave money time to work. And that's the part people underestimate. Most of the final value doesn't come from your contributions. It comes from growth, on growth, returns, earning returns, year after year. Now, here's the twist. If you waited just 10 years to start, same £1 a day, same return, your final amount drops dramatically. You'd lose tens of thousands of pounds, even though you only skipped £3,650 in contributions. That's the real cost of delay. Time is more powerful than effort. This also reveals why small habits matter more than big, occasional ones. One feels too small to care about, so people ignore it. But consistency beats intensity over long periods. It's also why investing feels boring. There's no excitement, no dopamine hit, no instant reward. The payoff is invisible for decades until it suddenly isn't. And that's why most people never experience it. They're waiting for more money to start. But the math doesn't reward waiting, it rewards starting. Even more importantly, this example assumes average returns. Some years would be bad. Some would be great. The key is staying invested long enough for volatility to matter less than time. So the real question isn't, is £1 a day enough? It's this. What could you build if you stopped underestimating small actions repeated for a long time? Because wealth isn't usually created in giant leaps. It's built quietly, one day at a time.